If you're already trading the markets, the chances are you've been through that first phase of looking at it and thinking, I can't do this. But in fact, you realise that if you take it from the very beginning and build up from the very start, it is actually possible to understand the fundamentals quite quickly, and you get to a position where trading almost becomes second nature. We're talking now to Lee Sandford, who is the owner of tradingcollege.co.uk. And of course, Lee, also, you are an IG client. I know that you use the IG platform through Pro Real Time to trade this. You're a certified technical analyst, I believe. Correct, yes. And you approached this from the way of getting in at the beginning, and you built up your knowledge of the market.
Absolutely. Yes.
Explain a bit more about how you acquired the knowledge you need to trade.
Sure. I started trading 14 years ago, came straight out of professional football, and just went straight into it. Opened an account with IG, started trading, and didn't do very well at the start. It took me about 18 months to really sort of know what I was doing, and then the account started to grow then. I got much better at trading, but it did take a while to sort of get familiar with the markets, because it's like no other job, isn't it? It's like no other thing. You certainly have to learn your trade as a trader.
So what strategies then do you follow now? Because from an investment point of view, you buy and you hold, you get your dividends, you get your share improvement or whatever it is. But trading, you can have very different approaches to it, can't you, as a trader?
Absolutely. I'm predominantly a day trader. So this is what I do. Wake up in the morning, open the screens, trade in front of my students, and we day trade the markets, looking for income that we can withdraw from the account every single month or quarter. So I'm a decent day trader. That's where my strengths are. I also have a SIP that I manage myself, and ISAs, which I manage and invest on my own recommendations and analysis of the markets. So I've really taken control of my own sort of finances, really. But it's day trading is where my strength is, Jeremy, and that's...
What is the true definition of a day trader? At the end of every day, do you close out all your positions?
Well, basically, you want to make money as quick as possible. You want to make your day's money as quick as possible. In weather like this, you know, you want to open your screen, start trading, and be done as soon as possible. That's not always the case. And most of the time, you know, you're there for a couple of hours, maybe trading the markets to earn your day's money. But a day trader is exactly that. You're looking to close down your position by the end of the day, hopefully as quick as possible.
Yeah, and you've also got to manage your losses as well. That's all. It's all about how to manage that, isn't it?
Huge. You know, this is the thing that new traders, when they start trading, and I've taught hundreds of people to trade the markets, they look at the profits, they look at the gain, but they don't think about the risk, stop losses and stop orders that they need to sort of, you know, take into consideration.
Yeah. Okay. You've logged in in your IG account, and you've loaded up a couple of charts for us. Explain exactly what it is you do. Let's look at one you've got at the moment. Explain what you've got in front of you.
Yeah, I think the easiest way to sort of trade the markets is always with the trend. Okay. You know, don't start doing counter trend trading. When a trend is when the market's making higher highs and higher lows. Okay. These are moving averages underneath the price here. I use the 200, 50. 20, which is this white line, and the 8-period moving average, all exponential moving averages. Now look at the angles of these moving averages. Nicely 45 degrees here. And so you can see that the market's moved up very nicely here on the euro sterling, moved from 84.50 all the way up to 85 here. So this is where you want to trade. You want to trade in this trend here. And you don't want to be counter-trend trading. It's the death of everybody's trading account if you start counter-trend trading. And what I look for is I look for these lovely angled moving averages. And you see these moving averages, they act as support. And in a downtrend, they'll act as resistance. And what you're looking to do is buy the retracement, the pullback, also known as reversion back to the mean. And what I like to use, I use this tool here in real time. And it basically measures, it's not the greatest of chart to show you, but it measures pullbacks. And it measures previous areas here where price has reverted back to the mean. And so I would move this tool up and project it from the high. Not necessarily a great example here, but I'd be looking then for a pullback to what we call symmetry here, or a reversion back to one of these moving averages.
Now these candles this is a daily chart, is it? I mean, to some degree it doesn't really matter, does it, so long as you've got a control over where you are?
Absolutely. I mean, I'm a big Elliottician. I look at Elliott wave, and it can get very complicated, Elliott wave. I recommend that people should keep it really simple. I'm a simple guy, so I like to keep my trading simple. And I would recommend that people just look at 5-wave impulsive moves and a 3-wave corrective move on waves.
What is the Elliott wave? You're getting into an area here that some traders, early day traders, won't actually get onto for some time. What is an Elliott wave?
Elliott wave is basically looking at buyers and sellers, accumulation of the market going up in value, and then profit taking as the market retraces, and then a new wave which can advance 5 waves up with these 2 waves back, wave 2 and wave 4, and then we go into an A, B, C correction. All it is, Jeremy, is buyers and sellers taking positions at different areas of a trending market.
So you've spoken there about Elliott wave and your application there, but how do you get into a trending market? How do you place your trade? Where do you know where to get in?
That's a great question. Now, the moving averages always help, Jeremy, and you can see here on the dollar CAD, this is a 1-hour time frame, and you see the moving averages underneath price here, okay, hugging this 20-period moving average, which is the white line. Then it drops down below the moving averages. So the moving averages act as support and resistance. There's a lovely little tool in Pro Real-Time, Fibonacci expansion. If you click on that, it actually measures where the price reversed previously. There's a little 100% line here, this yellow line. It's just measured that previous pullback. Markets repeat themselves, price repeats themselves. You can see here, so I've just taken this line, moved it down here, and then moved it to the high, and say you were trading this market. As it comes back to the 100%, this is where you can start to buy this market. As it comes back here, it feels uncomfortable to buy the market, but it's the best time to buy it. And so on this downtrending market here, I want to start to draw reversions back to the mean. And you can see as the market, I've drawn this one here, as the market comes down here, the price comes down here, it reverts back to the mean, hits the 100% at the moving average, and that's a great place to enter the trade. Nice tight stop, and it rolls over here and you go and grab some pips out of that.
You mentioned stops. We've already talked about how to manage your account, especially if you're losing money. First of all, how important are stops? Do you use stops on every single trade?
No, I don't use stops on every single trade. As a day trader, I'm sitting there monitoring the market. So I like to stop myself out of a trade as a day trader. Now, that's not for everybody. Now, if you're somebody who's a swing trader and holding positions overnight, like I do as well, I will also have I'll make sure I've got a stop loss in place. You never know what's going to happen.
So if you're away from your computer screen, that's the point at which you put a stop loss in?
Absolutely, 100%. You've got to manage risk. But for me, doing it for 14 years, you know, I'm a day trader. I don't want to be stopped out and then it go in the direction I thought it would do. And that reversion back to the mean always helps. But you've got to manage risk. It's so important for a new trader to manage risk.
So your stops are what? Going back to the moving averages, where would you put a stop? I mean, in terms of a trade for the dollar CAD you've got on the screen.
Absolutely. Well, this is the biggest question I get asked. Where do you place your stop? And traders want to manage risk, and they're being very professional with that. So it goes back to that philosophy, back to the moving average for a buy signal. And if you can get a stop loss under the next moving average, so if you're looking to buy the 8 period here, put your stop loss just behind this 20 period. If you're looking to buy the 20 period moving average, maybe a stop loss just below the 50 period. Look at this, back test it, don't take my word for it, but look at the markets, look at price action, and use moving averages as support and resistance, and that's where you place your stop, behind those moving averages. And I'm sure there's 1,000 ways of placing stop orders or where to place stop orders, but this is a solid way of doing it.
Just going back to the general comment, just to wrap up, in terms of the markets, you said you're a day trader. Do you concentrate on FX or equities? Or, I mean, we've spoken about a couple of foreign exchange trades here. Do you go out of into other areas, or do you not?
That's a great question. Well, because I'm an analyst, price patterns repeat themselves. It doesn't matter what market it is, but I predominantly trade FX. Lots of liquidity, I can get in and out the trades, cost for trading is lovely and cheap, and you know, there's a lot of beginners that trade FX. There's a lot of stuff out there. Get into forex trading, you're going to become a multi-millionaire or whatever. And this is where the new traders make their mistakes, in the FX market normally.
What's the difference for you in assessing whether you are a swing trader, you keep your position out overnight, or whether you stop out at the end of the day? I mean, as a day trader, why would you go for one trade over the other?
Me personally, most people are busy. They've got busy lives, and they haven't got time to day trade the markets. I wouldn't recommend going into day trading at all until you've been coached on how to do it. Swing trading the markets, you're holding for a number of days, and I think that's where people should start, in swing trading, because people make mistakes. We've all made mistakes. I've made every single mistake under the sun with trading when I first started. And so really, you've got to reduce mistakes. And the more you trade, the more mistakes you're going to make at the start. So take your time, get home from work, do this in the evening, fit trading around your life. Grab a cup of tea, coffee, sit down, analyse the markets, and, just use one or two strategies to start with. And just, sometimes traders get in their own way when they're new. They move their stop too tight, they're too active. Sometimes the less you do, the more you've got a chance of getting a better return.
Okay, sage advice.
Yes.
Lee, thanks indeed there for joining us. Lee Sandford is the proprietor of tradingcollege.co.uk. They're giving us some of his trading strategies.